started here. Hey, good evening, guys. Ken at Tortoise Capital. This is the small group coaching for April 15th, 2024. Watching the world on fire right now. Just, it's the year 2024, and we're still fighting over sand, right? And religion. Just there's no hope for these monkeys. I would start off by just saying I saw a really good discussion, and I'll find the link and share it around, but it was having to do with game theory and what we can learn, and it was taking a look at the work that Robert Axelrod did in the heroic age of game theory days and computer simulations, and it was the prisoner's dilemma. And he created a simulation where people could submit strategies for the prisoner's dilemma, about like if you and I are both prisoners, and if we could do one of two things. We could either defect or basically surrender, or we could steal, or lie. I guess that's what, you could lie, deceive. And if we both deceived, so in other words, we were trying to do it for ourselves, we would each get one gold piece. If I lied, but you surrendered or yielded, then I would get 5 and you would get 0. If we both yielded, we would both get 3. And there was another position in there too. Yeah, like if you yielded, but he lied, he got 5, you got 0. If we both fought, it would be 1 piece. And then if we both agreed to cooperate, then we would both get 3. And so if you have it turns out if you're playing just a 2-player game and you have a finite number of rounds, if you have just one iteration and you don't know anything about the other guy, well, that's why prisoners in jails narc on each other. They turn each other in because they know the other guy's going to do that to get a better deal. So I'm going to lie too. And then if you expand that out, so it's a very cutthroat environment. There's no incentive for cooperation. But then if you make it like 200 rounds, you can actually learn about the other player's intentions based on the moves that they made in response to the moves that you made. And you can develop more cooperative strategies that give you a better payoff than just the, 1 per turn. If you have an exact number of rounds, it quickly leads to gamesmanship. If it's a tournament that is person with the high score wins everything, then they start backing up, say, well, if you're going to screw me on the last turn, then I'll screw you on the turn before last. And it quickly runs you right back into the naked competition, survival of the fittest. But if you make it something like 200 approximately, plus or minus some number, and you never know when people become in an open-ended game like that, they become more altruistic, because not only is it a good thing to be good, but there's a tangible payoff. Well, one of the things that they learned was that if you had a series of those where you could inherit the information from previous tournaments, and you could see which strategies won, you could then refine your strategy for the next cycle, next generation, and then things that used to have dominance early began to fade out, and then only the ones that you wanted were ones that were generationally strong. And the rules that came out of that were astonishing to a lot of folks, and it was that basically the best strategies were nice strategies where you cooperated. and where you had some element of forgiveness, so that if they screwed you on one round, you were willing to allow them to become better people later on, but you were quick to respond and punish if you got screwed. So it was be nice, be forgiving, but don't be a pushover. No, actually, I should reverse it. Be nice, uh, be responsive, don't be a pushover, and then be able to forgive later. So they weren't going to test your limits. And so those kinds of things that had multi-generational ones, essentially the tit for tat, if you screwed me this turn, I'm going to screw you next turn. And then 10% of the time you don't, just to give them some idea that you were capable of being reasoned with. Because if you were both playing tit for tat and one guy randomly screwed the other guy, then they both start screwing each other forever, and it quickly begins to decay. It's only the possibility of forgiveness, but without being a pushover, is a very strong multi-generational strategy. And what made that even more powerful, the idea of forgiveness, was when they started introducing a little bit of randomness into the game, where whatever signal you put in could get distorted. So I wanted to cooperate, but for some reason it was interpreted as, screwing the other guy. So the possibility of forgiveness allowed for recovery in an environment that featured noise and mutation, as well as pure signal. So I say all that simply to say, now we knew that in the 1970s, and it perfectly explains the behavior of the large empires in the nuclear arms races. And yet we still can't seem to build out cooperation. So my belief is that the only hope for the survival of the species is the appearance of aliens that cause us now suddenly to realize we're all in this together, and we're forced to cooperate, but only because there's a larger scale alien. So what I think the increased number of reports on alien technology and visitations and all that is just is deep think, prepping the objective for people to become accustomed to the idea that aliens are real, and that we really ought to cooperate before they get here in the next wave. So that's what I think the long-term evolutionary strategy game is going to be. So anyway, the work is by Richard Axelrod, and I'll post a link on it to Patreon. It was absolutely fascinating. I'd done some work with that before, but I was reminded this weekend with a really good video. Yeah,
Yeah,
go ahead.
Ken, I think I saw that same video 2 days ago. The one I saw sounds the same. It was Veritasium is the channel.
Yeah, that's the one. That's the one.
Game theory reveals about life, the universe, and everything. It was
Yeah,
really good.
yeah, and the guy that's in there that's talking about that work with Axelrod, Stephen Strogatz, I was studying a lot of his work when it came to systems thinking and chaos theory and game theory and organizational strategies back for my dissertation work in the early 2000s. I was monkeying around with how does chaos and information theory and networks affect our ability to come up with strategies in a world of incomplete information, with agents and actors who can change their stripes and who can form alliances and all that. So there's possibilities for diplomacy. It had a lot to do with how to bring peace to the valley. So as soon as I saw they were talking about Axelrod, I jumped all over that. Yeah, that's a fascinating video. They did a fantastic job summarizing multiple decades of work in that short video. So they did a nice job of that. Well, I say all that simply to say, here we are in the 2024, and today should have been, for us intraday traders, should have been a good day on the downside and very relaxed signals. the clarity of signals when a good market rolls over and starts to fill, those are some of the most reliable, persistent signals ever. So today was one of those kinds of days for me. Hoping you guys got a piece of that. Look, I think George did. I looked at some of your trades already. So I'll welcome Juan Carlos, and I'll turn the floor over to whoever is up next.
I can go real quick.
Okay.
Let me share my screen. I'll hit this real quick. Just basically, I continued working with my Quant Connect programmer. I'm guessing we're about 90% done. We're still having some slight discrepancies in signals versus trading view. So looking at what those might be, it's to the point now where it's, maybe rounding errors, but well, I don't know. There's about 15-20% more trades in one system than the other. So something's still a little off, but I think we're getting really close. The tortoise flips trading plan I sent to Luke for feedback, got some of that, and then continued working with Everett. I'm going to show you some market classifications and ask you a few questions about that, but we got those working. And thanks to Juan, I don't remember if this was the week before. I think I figured it out the day after our last call, but the data issue I was having, I was using Juan's market classification code, and he kind of sent me SPY, and I was off. It turns out the ATR, there's a lot of different ways to calculate that depending on the type of moving average. So once I figured out that's what it was. His was a simple. We changed ours to simple, and it started tracking. I think we're within 3%, 4%. So I'll call that good enough. They were really close, even when they were off. I'm going to continue analyzing the PRX system 1 this week with GBTC and ETHE on the 50. The symbols you gave me, Ken, seem to be a lot stronger on the 50. So to make it simple, I'm just going to run those other two up at 50. It was pretty close anyway. And couple of questions for you.
Yeah, let me just say the thing I would look at for those two symbols, GBTC and ETHE, is you can't go short those.
Right.
There are some alternatives now that are out there that can be shorted. But my spider sense is that as volatile as those are, that the beginnings of failure in them after a good period of outperformance seems like it would be a good stop and reversal kind of a system, or ready to go short. And you might want to investigate that as well. Okay, go ahead.
Okay, definitely will. Okay, so these are basically the symbols I ran across the bottom. I need to add oil. Somehow oil got, I think, left off of here. Yeah. But this is the classification. I think I showed it 2 weeks ago, but we had some issues. It was off, as I said before. But interesting that, decent performance. The expectancy is not great. I do not have all of my coin flip and things like that in here yet. That's one of the next things we'll do. But when you filter out the trades that are below 0.1 on their average R value, you end up with better results for sure. Yes. The question, and then so I looked at this and I was like, well, what would it look like if this was part of the PRX system uses a 50 or a simple moving average, a 20 or a 50 or 100, 200? Kind of, I thought, well, that's kind of like the same thing that the market classification is. So it's its own filter. Why don't I just run all the trades and not even have that filter on there? And so this is what that looks like. In other words, use the market classification as a proxy for what they were using. I think on their system, or I know on their system, you have to be above an SMA on the close and go long only. So anyway, it sounded a whole lot like a market classification. So the one on the right is all trades taken without any simple moving average filter.
Clear winner.
Yeah, definitely. And so that was definitely worth doing. The other thing, so the question I guess I have for you, Ken, and I'm worried about the risk of overfitting. I'll just do it like this first. If you look at these, you can see there's some similarities, but different stocks definitely have different
Yeah.
characteristics.
Yeah.
So the question is, if instead of just running the market classification at the summary level, if I ran it at each individual stock level.
That's what I've found. I have found to be the case.
Okay.
Is especially when you have things in there like CLF and Alcoa.
Mhm.
Those things have less correlation coefficient to the SPY.
Makes
They can
sense.
just move on their own as a collection. Like they're only, XLB, I think they're part of, and that's only like 6 to 8% of the total S&P is reflected in those heavy industrial companies. And so they can stand out and stand away from what the market's doing pretty easy. Like if there's something specifically driving metals, base metals, you can get a very clear, different performance that's not governed by the market classification, but is more tuned to what they do. And then I would say the same thing I think you'll find with Mexico and Brazil is that they are moving to their own drummer in many cases.
Right. Yeah, it
Um,
was
and that one is surprising to me on AWZ.
me too. They were so different.
Yeah,
Quite a bit.
that one doesn't surprise me on Mexico. That that it has some exceptional moves that are genuinely different
Mhm.
than the broader market. So I would run them. I'd like to know both the broad market psychology and the sector or target psychology too. So I can see if there's a distinction between, hey, the market is extremely bullish. Wow. But for some reason, this other little target is bearish volatile. Well, that's such a distinction that something's going to give. It's either going to get exhausted with the sell off and then begin a recovery, or it's going to continue to be enraged to the downside with people that are committed, moving it hard till they've met their objectives. So I just like it. I like running them both and just putting them both on my little tables
Sure.
to see
So
what the classifications are.
yeah, so if I run them separately, and in other words, and Alcoa just take these four,
Yeah.
Cliff take the ones that are positive. If I do it that way, it looks really much better. I just didn't know if
Yeah.
I was in the borderline overfitting category, but it
No,
makes sense.
I think you're okay there because um, you have simple rules um, that are responding to turning points. And what this is just showing is that things turn the corner at different times while the market's moving. And when the market is very volatile, you're getting correspondingly larger moves in both directions. So there are some in there where when the market is volatile, you want to just be cautious. And then there's other ones where the market's volatile, you want to be Hulk smash, and take advantage of the
So I guess
moves.
the last question I have is, this is 4 years worth of data. Do I go with this and start trading it? It occurred to me maybe I want to run 2.5 years, do my classifications, and then kind of do an out of sample for the next 18 months just to see if it's.
That's what I would do. I would almost take, if you got 4 years of data, I would just take the first 2.5
Mhm.
years, do your tuning, and then just run it naked through the next 18 months, see what's going on. Because
Okay.
that'll be the closest to the next thing you do, which would be to start trading forward from
Sure.
today.
Yeah.
So I'm trying to think. The only downside for that one is the last 120 days, except for the last 5, have been really a historically strong bull. So I might be a little cautious on that. Anything that is long only is going to look pretty darn good from about uh, August 23 to March 24. That's going to look like a really exceptional
Okay.
performance in there. So I would just be careful. if you wanted to fine tune that even more, when you take your, if you classified the broad market into those buckets and then did a composite set where you had market classifications from each category in the test set, and then ran the rules, and then tested it out a sample with data that again included all of those different kinds of market classes. That's about the best you can do to get a fair shake with the future. There's a extra work involved in doing that, but I think if you did, here's something you could do. If you took 4 months, I'm sorry, 4 years, and you said, I'm going to do 48 months. And what I'm going to do is take 2/3 of that data to run the test, and then 1/3 of the data to do the out of sample. Then you'd want to run about probably 32 months of, you do 4 sets of 8 months, and then do 8 months and then 4 months sample, and then 8 months rules and a 4 month. That way you're getting sort of a striated approach, and you'll get more of a true random sample. But at some point, the whole purpose of back testing is to be persuaded that it's not stupid to start trading it.
Right.
That it's worth investigating at 1/10 of your production size. And then use that as it starts growing, you increase the exposure based on its earnings. And then you say, fuck it, let's go. Pardon my language. You say, heck, let's go. And that becomes an abductive style of trading where you got some evidence. In some cases, you make a hypothesis, you run a controlled experiment and try to build forward that way. Instead of trying to have a one grand master theory of everything before you start trading. Abductive approach allows you to just make reasonable guesses that should be better than naive, we hope, and then see if it outperforms and build up knowledge that way. So I think it's ready to start testing.
Excellent. Okay, thank you.
Yeah. Okay. Who next?
All right. I can go.
Okay.
Okay.
Yes, sir.
So apologies for being late. I was preparing dinner and visitors still in my house. And so that's that. Last week, I started on the development of the strategy. I coded in TradeStation some of the fields of the auto-framer, plus the different booleans or indicators of the sniper, the 5.
Yep.
So I produce all that data. I'm loading it now to the charts that are running on 1-minute charts. So I have the signals and the charts, and I'm coding the opening range. So the frog as the opening. So I'm trying to fine tune that at this moment. And I just have a simple exit dinner for 2 or the end of the day. That's it. Playing with those numbers, it doesn't look that nice. Obviously, I'm not capturing the big 2-hour moves or anything like that. So I'm expecting that it's not that nice, but it's not that bad either. Very few signals, though. I guess it's in the dispersion of multiple symbols that it starts making sense, but have not that many symbols. I was noticing the fireworks being like after explosive moves. That's retraced to the mean, or it either way.
Yeah, you never really know how people are going to react to large noises. In some cases, they say, like, just imagine it's the gold rush in 1848, and the the news comes back, hey, there's gold in them there hills. Some people say, well, by the time I got the news, it's all over, so I'm going to short that. The rush is over and it's the reversion to the mean. There's no more gold to be found. Guys keep trying harder and harder. There's less and less gold, and it's a bitter slide until they panic and sell off. Or it's, second wave and third wave of things. So I'm always prepared that when I see the idea behind the fireworks is that it's the opposite of the pure fence sitter. Now, the fence sitter is the easiest one of all to understand. It's in the middle of the trading range on each of the time frames, and it is very quiet. That's the absence of anything interesting. And so you end up getting this long, skinny, tight tail, very still pond at night. And then a stone of any size magnifies the sound. Oh, what was that? And it could start a chain reaction of momentum in the short term. And because it's exactly in the middle of everything, there's enough of a room for momentum to fully unwind in both directions, or to go a distance and then up, fake, come back to the mean again. So that is the absence of any noise whatsoever, and everybody gets caught by surprise. It's like the old cowboy movie that says, yeah, hey, it's quiet. Yeah, too quiet. All the animals can sense that something's about to happen. The storm is getting ready to blow, or there's an attack at 3:00 in the morning. So that's the fence sitter. I love that one.
Yeah.
Especially if I can enter around noon in lunchtime. That's like perfect. So the fireworks is the opposite of that. There was already one big indisputable explosion, a big explosive move that took it to the limits of those look back periods. But it has rolled over and come into a temporary quiet. Like, hey, it was and we actually saw that last week in the S&P. It had 120 days of just unbelievable directional move, and then 5 or 10 days where it couldn't really make new highs. It was, and then every test to the low side was being bought back, and so it just kind of got into a sideways and was getting quiet until today, or a little bit on Friday. So the idea behind the fireworks is that you've had the first boom, people have come to their senses, there's a certain temporary pause, and now the tension is building. Well, what's going to happen now? Is this like the 4th of July fireworks where there's the collection of big booms and then a 5 to 10 second wait and then another surprise boom? Just when you thought it was safe and you were relaxing, it has that delayed burst and it catches you by surprise and we're off and running again. Or is this really going to be one where it just slowly drifts back and now that run is over and now we're waiting for the next wave of whatever buying or selling is going to come in? So the fireworks says this thing was recently in play and people are prepared to play momentum to continue higher or to be a sharp move to the downside, because that was it, and it was it overplayed its hand, and now it's going to revert to the mean. So the fireworks is different because you've already seen one leg of a big move, and now you got a sense of how much discretionary trading money was in there. How far could they move it? The people that, there's people that bought and hold and they're not trading it. So there's a certain amount of that. But now this thing had an exceptional short-term move, and the distance that it moves by and times the percentage and volume tells you how much power there was to, or adrenaline, if I can say it that way. Well, there's that much to take it back down the other way, because for every winner, there was a loser. So the traders could certainly move it all the way back to where it was, which used to be the fair value back in the middle. So, so the fireworks then is characterized that it's at the end of an exceptional move, and it's either extremely volatile, so it's still going, or it was exceptionally quiet, meaning it's the remarkably no momentum. So it has to be an exaggerated amount of volatility, either exceptionally noisy or exceptionally quiet, to create the unusualness that is necessary for the fireworks. And then when it does start to move, then we have a reason, we can interpret that pretty easily. My favorite, of course, would be the fireworks that is still volatile and it just keeps moving. So you just off you go until proven otherwise. But if it terminates in a doji, like the smallest daily range of the last 4, and the 5-day range is abnormally quiet, that's really good. And then if it breaks down, you will slowly see the acceleration to the downside. And that's what we saw today. There was actually some strength, some remarkable strength in the market early in the first hour. And then there was just like, oh no, we're a world that's close to World War III, and Iran is threatening 1,500 missiles. They're going to go 10 times the 150 missiles they sent last Friday. Well, here we go. So that started to slowly build momentum intraday, and now suddenly everybody's at home. It's a Monday, a big red candle. We certainly have put in a top, and it's expanding to the downside, and there's still a very large move of the last 4 months to preserve. So anybody who felt like they made exceptional gains in that period are now more excited about preserving capital. So now they're motivated sellers. And then you have the guys that are aggressively shorting. Now suddenly we're throwing fire on that as a momentum to the downside. That's exactly what you would expect to see in a fireworks move that is reverting to the long-term mean. And that's where so how far down can it go? Well, that's where you start looking at where's the 150-day or the 270-day moving regression line, the 150-day VWAP, some of those different measures of support and resistance, and the fractal framework tells you where that unsurprising moves to the downside might be. You look like you have a question. Yeah.
Yes. So today in the S&P or the SPY should be a firework signal.
For sure. I think so. I know it was over. I think there was a fireworks last Friday in the way I interpret, because Friday and even Thursday and Friday, if I remember, I probably need to pull it up. Let's see.
I think Thursday was the inside day.
Yeah, Thursday. Yeah, Wednesday and Thursday were kind of quiet. The 5-day range that ended last Friday was actually pretty small. So that was feeling like a fireworks, and it was ready to break in either direction. So today, when it breaks below Friday's low, which happened pretty quick, you end up getting a pretty clear intraday signal to go. Let me look at that on the 3-minute here real quick.
Yeah, probably because of the market.
Yeah, for sure.
Okay, cool. Because probably because of the market was going up, I only saw long signals. So
yeah,
now it's the time to start looking at the short signals. So
yeah, let me show my screen here real quick, and I'll show you just a way to start interpreting that behavior and to start looking for turning points intraday. Let me share screen and 2 share. Yeah, so this is a 3-minute chart. And
Okay.
Yeah. So this was Friday's close, right? So there's a big gap up, which was surprising behavior. And you get the VWAP right here. And then you can just see that that was almost a gap and trap kind of a deal. Well, the official collapsing dragon, you get this double bottom over here. And now look what happens as this thing comes down, leg one, reversion back to the VWAP. That's all the profit taking of all the short-term short side traders, right? So it holds here, comes back to the VWAP, rolls over. That's your owl entry right here when it crosses the Bollinger Band main. Now, when it comes below here, you have an intraday collapsing dragon right here. And then the next collapsing dragon is this one when this comes down and reverses. Now, what makes this one slick,
Yeah.
you know, is you're seeing all of these kata 2 type things, right? And you have a support level here, and when that breaks, you get a collapsing dragon. When that breaks, this held support briefly where you would expect it to hold support. But then when that rolls over, you have this little window of time to be ready to anticipate the collapsing dragon, or you just wait for the collapsing dragon, you get it here. And then this is what I want you to see is when that strong support level breaks, look at the collapse. And this is what makes it the collapse in the collapsing dragon. That happened in about 20 minutes.
Yeah.
And then you still have this one. Because now you have the next R10 rollover. It came all the way back to the Bollinger Band main and then fell again. And that's the last gasp of the intraday traders. Then they cover their positions and then it's just noise to right here. So now I look at this and I say, here's my zero state for tomorrow. Anything north of about 505, that's about 505.50. And then anything below 504, instantly short. Right?
Mm-hmm.
So the point I want to make there is that this was the last gaps of your fireworks, big gap and sell off. And that's all 1 day move right here from here to close it here. And then that makes this the trigger for the collapsing dragon. And even if you don't get any of that, that break right there should be a trigger for that move, which is from 509.50 to 504.50. 504.50 is 500 points. And at $10 a point.
Yeah.
On the futures. So you don't have to get all of it. You don't even have to get most of it. And so the fireworks, while we're here, the fireworks idea. Let's see. Yeah, again, the fence sitter is sitting perfectly still in this little quietude, very, very quiet. And it's in the middle of the 150-day look back and the 30-day look back and the 10-day look back. Plus, it is extremely quiet in here. And so any breakout from here, If it breaks above a 10-day high, somebody's going to get triggered. If it breaks above a 30-day high, somebody's going to get triggered. But there's a large move available in stages in both directions. So if I get my first leg, second leg, third leg, now suddenly by the time it moves out of this quietude and it gets beyond the 30-day, it's running amok after that. So there's ways you can start sneaking in on the fence sitter. So one of the least surprising things would be where I had a fence sitter and then I had 90 days that just kept pushing it higher and higher. And then that thing rolls over and then terminates in a doji. And if there was enough sideways chop where the 5-day range was really tight, I've gone from this lots of momentum to a maximum limit. And now it's just wondering, what are you going to do? Was that a failure to fail, which set a base for the next leg up? Could be. Was that failure to follow through a reflection that maybe this was too much, it went too far, and that the real fair value is down here, and now when it breaks down, it's going to revert back? That's where we are right now. We had an enormous move up. It terminated. The last 2 weeks have been sideways, and now because it's a world at war and Trump's getting prosecuted and Biden's losing his mind and nobody has any good ideas, holy shit. Just running the asylum, you know. Now suddenly, so now the question is, as you start looking back, you got to say, where are the moments of natural support and resistance that can come over here to say, that's a place where I wouldn't be surprised to see it find support and recover? Or if this fails, now it's really going to go all the way back to 400. You know, it's at like 504 right now. So 500 is the next round number. And if 500 breaks, now you got all these little series of supports all the way down to 400. And now suddenly, you know, we're back into those shenanigans once more. So I wanted to draw the distinction between pure fence sitter and then a powerful fireworks, where this move up was exceptional, indisputable, in some peak level. And now I have a retest or a reversion to the mean. And the fact that I prefer to seek a quiet in order to play it in both directions. But if this thing just comes here and starts reversing right away, too easy. I just start buying. Now I've got caught twos and I just keep going. But at some point that fireworks comes down to where, hey, dude, you had 5 or 10 days and it hasn't continued and it hasn't really failed yet. Now I can put a strict collapsing dragon on this thing and say, all right, let's go. And then if it has fallen far enough, I can even find cases where there's a 2-to-1. I should make that purple. I can find 2-to-1 inside here just on a retest of the 10-day high. That's what the auto framer does, because it uses the 10-day high as the target and it computes yesterday's little range. So if you had a fireworks and you had an auto framer, that's the holy grail setup. Because you had enough of a sell-off that there's now a strong argument that it could just keep going.
Yeah.
That relies on the exceptionally large move up, because now you have motivated sellers who want to lock in pieces and parts of their ill-gotten gains. So now they've joined the sellers. right?
Got it. From the discussion here, it seems that the fireworks signal can be used in more than one day after it happened. So I had it yesterday.
Yeah.
I should be looking a few days after the signal, not just trading the next day.
Yeah, I keep that persistent, you know, because you never know when it's going to happen. The main thing was that you had this is a swing pattern, really, and so I look at that as any time for the next, 5 days, not more than 10. But I don't know exactly when that's going to go, but I know that that's something like a trigger. So no matter where it happens, 2 days from now, 3 days from now, that's a line in the sand for me. That, and here's why I say that. If this thing just keeps going sideways and never broke below this red line, and then suddenly it does, remember, that's accompanied by the fact that it never really broke back to the upside. It never broke to the upside. So the longer it stays in tension here, the more it's starting to look like a coin flip in either direction. The sooner it breaks out, the more it looks like a Kata 2 continuation. But if days and days keep going by and there's no follow through, now we're starting to increase the probability of the downside move. Failure to follow through is information. So the longer it stays in that sideways choppy or sideways quiet, the stronger the case for the downside move. Because they had 5 days to make it go higher and they didn't. Maybe it's time maybe the buyers are all done and moved on. They went to find their next meme stock. So that's the psychology that I use when I'm looking at the sniper, so I'm looking at 150 and 30 and 10, and I'm looking at the 5-day volatility. That's a swing pattern.
Yeah.
The next 1 to 10 days, I'm expecting something to come out of that. Especially like the Godzilla, man, that thing was horrible. And it comes out of here. That thing could take a long time to unfold. It starts and then pauses, then it could be Kata 2s all the way up. And if we go all the way back to like April of last year, that's really what happened. There was a time this thing was down, this market was down at 370 and 380 in the S&P. And it was getting ready for it really to collapse, and it didn't. It was a Godzilla, and then that thing turned and just and went north for a historic recovery. That's what this was. This is dailies. So this move here that came down to like 410 and 400, at this point we were saying, holy crap, if that breaks, this is the next 380. But it didn't. And it gives you this. It wasn't exceptional until it broke above here. Look how long it took at that location to decide what to do. That was an extraordinary move off the bottom. That's like an SSC, and then it spent 10 days in this little box. And so the question really was, all right, it's almost a fireworks, because this was about 150-day high. And here it was again. Can it break through? I don't know. It's 10 days it spent in that box. Well, was it going to come down to here? Could be. Was it going to break out higher? Could be. So here's a leg, pause. Here's a leg, pause. Here's a leg, pause. And now it got to here. Nothing. And this is the first day of big downward panic selling, right? So now I can say, all right,
Yeah.
gotcha. So that's key. For the same reason that little doji right there was an important test, and it responded by doing that. That is a hugely important price level.
Yeah.
If it gets down to, 500, you can't make this stuff up. And that's only from here to there. That's 1%. And if that breaks, well, here's the next one.
Yeah.
490. That's 2%. Could it make that move? Could it make a 3% move in 1 week? It could make a 3% move in 1 day.
Day.
How do I know? Because it did that today, 515 to 505. That's a $10 move. So it could go from 505 to 495. And I'll tell you what, if it goes to 495, that thing could go to here pretty easily. So if I just take $5 chunks, and then if this fails, now this is the next really big reason, because it spent a couple times testing in here. And the upper limit of that is about 475, and the bottom piece of that is 470. That's really the line in the sand. This is the exceptional gains. And everybody that saw what happened today, there were people that were buying this. Because here was the close, here was the gap up, and there were people thinking, oh, great, we're at the Bollinger Band mean, and up we go, and all we got to do is get above 425, and we're at an all-time high. Psych. So if I'm sitting right here, and if that is 1 unit, 2, if 470 breaks, look out below. You know what I mean? And if I was invested in all this and I just decided to get out near the close today, I gave back 1 and kept 2. So that's who was selling today in the afternoon and could be selling early. So if there's any more selling tomorrow, anybody that didn't sell today is going to wish, man, I wish I'd sold yesterday. So let me do the next best thing and sell there. So how many guys came home on Monday and looked at the closing price actions? Oh shit, sell it all tomorrow at the open. The least surprising move to me would be big gap down tomorrow. Then I don't know what happens. It did a big gap up today, immediately large sell-off and closed poorly. So tomorrow, if there's a big gap, it could very easily be one of those. It could very easily be one of those. So tomorrow, wherever it opens, and the bigger the gap, the more I want to put that straddle of an R10, or I'd probably use just an R5. Because tomorrow's going to be a range stat day. And if I risk an R5, I've still got 4 chunks in either direction, and I can make a living on that. So I'm going to be really ready to trade the open tomorrow. Because tomorrow is turnaround Tuesday. It's either going to be piling on today's selling pressure in the S&P, or it's going to be a gap down and then buy on dip opportunity. There will be some institutional money that is going to be ready to hit the futures hard to buy on a dip to restore calm to protect their positions. We'll see.
Okay.
But
What
tomorrow's a big day.
Your R5 is range stat divided by 5.
Yeah, it's really
Okay.
just 2 times R10. Yeah, because the range stat is, if I cut it in 10, that's an R10. If I just take 2 of those, I've really got 4 more to the upside. So that's the R10 gives me 9 to 1. I give it 1, and then I've got 9.
Yeah.
If I use the R5, I give it 2 R10s, and now there's 4 R5s above, or in other words, 8 R10s.
Yeah.
So I like the math and all that. If I give it a full frog box, typically there's 3 frog boxes in a range stat, 3 or more. So if I give it a full frog box, I still got 2. But now I start feeling like I could have been trading inside the frog box. So I like either the R5 or the R10 as a rule of thumb on things that I'm comfortable trading.
Awesome.
Okay.
Just
Makes sense?
one comment.
Good.
Just one comment on all this. I think I was very confused of the signal and trading the next day.
Yeah.
This is more, I get the signal and I'm going to auto frame until it breaks out of the frame within the next 5 days, or else I just wait for the next signal.
Well, it depends on whether you want to be more like a short-term swing trader or genuinely an intraday trader. Like George is leaning towards short-term swing trading because he's using 30-minute charts. And Jeff is more like a pure intraday trader because he's using 3-minute charts. So you had a sniper setup that was looking back 150 days, 30 days, and 10 days, and you found that today there was a reason that this thing is about to make an exceptional move in either direction that could support both swing trading and intraday trading. You could simply use those to decide, like George might, what symbols do I want to just use 30-minute for the next 3 to 5 days and try to play around with that? Or which ones do I only want to do swing trading 1 day at a time? That's where I just, each day I run a new set, and then I'm only going to trade intraday and have no overnight risk. And each day I simply update and get a brand new set of targets and keep going. And maybe I do something like EWW and EWZ and DIA all the time anyway, because they're such good intraday traders. That looks a lot like what I do. But you could do it with George style, if I can say it that way, where I'm using 30-minute charts, and I would like to be able to hold it 2 or 3 days if it works out in my favor. That'd be fine. You could also even go a higher time frame and simply use end of day and have the wider stop and expect that thing to last 1 to 10 days, where it becomes a pure swing trade and I have a much wider stop. That's a case where I might have a $5 stop in the S&P, which is 1%. But if I was on 30-minute charts, I might be able to do that with a $2 stop. And if I was out on a 3-minute chart, I might have a 50-cent stop. It's all based on the fact that the sniper's telling you it's in an exceptional mood for sharp moves for the next 1 to 10 days. And then you decide, what's the time frame of engagement? Do I want to just end a day? I got to use a much wider stop because I'm planning to hold it overnight. Or I'm going to try it on 1 day, and if it starts working in my favor, I'm ready to hold it overnight and take the risk. So I might be on 30-minute for that. Or no, I just want to exploit those moves intraday and be done with it. And that's where I'm going to say on yours, where you're taking a tight frame, and then you're going to get to no lose plus dinner for 2, or end of day. The next logical place for you to take a look at is, what if I set this thing so that average, I made an average move in one direction. I might just take that as a profit target and not even give it a chance to retrace back to the end of day. If I had an exceptional move, maybe I just grab that intraday. I'm not going to lose money, and I get a chance to cash a really good move without giving anything back. That's going to end up being an exit strategy you test. But that comes into what's the average range? What's the average range plus one standard deviation? Oh, a range stat. So if I got a opening, I had an R10 or an R5, and it made a range stat move in my direction, freaking take it. Just cash it. Live to fight another day, and don't give any of that back.
Awesome.
You know what I mean?
Absolutely. Thank you. Work to do.
Okay. George.
Okay, I'll share my screen.
Yeah, Friday and Monday, pretty good days for you, it look like.
Yeah, it's thinking about my update over the last couple hours, I suppose. And I guess my results don't really aren't really that great, but I just feel like I'm making progress. And I think the reason I feel like that, this is last week. Last week was plus 2R, 2.1. I think I feel like that because I just feel like I have an understanding of the markets now, which I never had. And like today's opening up was a big surprise to me. And I knew exactly what I wanted to do, which was get short. And pretty much exactly what I expected to happen happened. So I just feel like I have an understanding of what's going on now.
Yeah. And the surprise you feel is a surprise that was felt by 95% of market participants. So your basic humanity is connected to humanity and how they're feeling. And there's only one difference. You know what to do and they don't.
Mm-hmm.
Okay. I notice my surprise, and then I perform standard work for abnormal moments. And that little shift in mindset is everything. It's everything. You're trying to think one or two steps ahead of what they're doing. And that's why what that little exercise I did with the support and resistance lines for, today and tomorrow,
Yep.
1 or 2 days ahead. Really, I don't really have to look much further than that, to be honest. If I'm driving my little Saratoga wagon across the Great Plains, and I know there's going to be mountains, I know there's going to be valleys and rivers and gullies. So I invest in my scouts to be out to see what the path ahead for the next 1 or 2 days looks like, to see if there's anything unusual. If there's something that unusual, I got 2 days to figure it out and have a plan for what lies beyond, or make a strategy without panicking. And so I'm always kind of updating that short-term and longer-term psychology. And that's, to me, what the 10-day, 30-day, 150-day look backs are like, and what the regression lines are telling me about the psychology of people in different time frames. I've been, just to be honest, since I added the little anchored VWAPs, I feel even better. I'm using a 3-day, a 5-day, a 10-day to govern the genuinely short-term psychology. And I put the 30 and the 150-day on just for completeness. But you can see right now the 3, 5, and 10-day anchored VWAPs are all directionally down in a straight line. 100% of everybody that is governed by that time frame are 100% sure we're going down. That's how they're acting. They're acting as if we're going down, or they're acting as if that's what they're worried about. That's what they're doing. So I got it. That's why I think, today was the first day of that. So tomorrow is second day momentum. Now, it's a big enough sell-off from 525 down to 505. That's $20. That's 4%. That's more than a weekly ATR percentage right there. Now the swing traders are on alert. Was this, this is just a buy on dip opportunity. It went to 525, came down to 505. And so we're just going to have, if they've got rules that tell them to start buying at a 4% sell-off and at an 8% sell-off and at a 10% sell-off, there's 3 tranches of money that are going to be triggered automatically by sell-offs of that magnitude. You know who those people are? Big investment banks that have long-term positions that they cannot afford to trade in and out of, so they're going to hedge again. They're going to try to calm the markets down with some buying pressure tomorrow. The myth and the reality of the plunge protection team that's exactly what it is. When do they act? Well, they start putting those orders in overnight in order to signal a large gap reversal. So that's why most of the time I'm flat overnight, because you're not going to catch me too many times with big positions like that. I'll get hit every once in a while where I just say, okay, you got me on that one. But most of the time I'm just closing out, let me start fresh. And if there's a big gap, I know what to do. I will feel the surprise when I say, oh, that's a big gap, act instantly. I just noted, I know what to do. I'll go to that part of the code book and know what to do. And that's what you're feeling right now. So enjoy that.
Okay.
Watch out that you don't start feeling guilty that you're calm when other people are shitting bricks. That's a real thing. I don't sense like enthusiasm and overconfidence is going to be our problem on the other side when we're successful, just men of a certain age. That's another advantage, thicker skin in both directions. So yeah, all your numbers are looking good right there. And when you get exceptional moments like today and probably tomorrow, those are the days when we got to really be good and relaxed. And the horses that are pulling our wagons can feel that we've got relaxed hands, and then they don't panic. They just do their work. And that's really standard work in abnormal times is what the troops look for in leaders, in combat, in crisis. If you can keep your head when all about you are losing theirs and blaming it on you. Rudyard Kipling. The poem, If. That's worth reading. All right, that's everything I got for tonight, guys. I think we're in good shape. We'll get this published and posted in the usual spot. And I'll get ready to send out the reports here. And we'll be good. Lionel Messi came to Kansas City and showed once again why he's the greatest in the world. My daughters got to take their significant others and little boy who's probably going to end up being my step grandson in the future if they do the right thing. I hope they will. He got a chance to see Leo Messi in Arrowhead Stadium, the noisiest, the loudest stadium in the world. Guinness Book of World Records. They designed it to amplify the sound of crowds. It's like a big parabolic dish to amplify the crowds. So 70,000 people there sounds like 150,000. And he just had the time of his life. And I got to watch it from home. And everything was good. So That picture you see in the background is Badger Hill. That's the place where I go for reflection. I sit under the tree. There's a little path that leads from the river. That's the Missouri River that leads up to our heights. There's a bridge across the Missouri and farmland on both sides, and the river that comes out of the mountains, and some wheat over there or corn, I guess. It's probably corn. And some forest and wild animals. And that's my sanctuary up there when I go to think and reflect on things, take the long view, but also develop tactical plans. That's the observation post, the reflection location. There's a little owl that lives inside that tree right there. Badger Hill. All right. Take good care, guys. We'll see you soon. Hey.
Thank you.
See you. Thanks.
Thank you.